right, well, let's stick with IPOs because our own Scott Gam spoke to Ken Fisher of Fisher Investments about all the upcoming IPOs in 2019, and Scott joins us now to talk about that interview. Hey, Scott.
Hey, guys. How are you?
Good. What did he have to say, especially in regards to, look, obviously, Lyft had its first 3 weeks, not so great, and now I have heard some people saying, well, maybe Uber won't go public this year as initially thought.
Interesting. Well, I know it's going to be hard to put the genie back in the bottle on the Uber situation, but look, I think when we have all these big name companies going public, companies that retail investors have heard of, I think it's important to hear from these, big money managers like Ken Fisher on how they're advising clients, because it can be easy to get caught up in the hype.
The frenzy.
Ken has some really good advice on how the IPOs tend to do in the first coming days of an IPO. So let's take a listen to what he had to say.
IPO means it's probably overpriced. They're done for the benefit of the issuer and the iBank, and therefore they're at pricing favorable to them, not favorable to the buyer. And the aftermath history of IPOs has always been inconsistently terrible after being public, which is what's happened with Lyft, as I said at the time. And the fact of the matter is that they can't get a lot of them off is a sign we haven't gotten to that euphoric stage. The pricing still isn't advantageous for them. And when pricing isn't advantageous for them, it's still advantageous for the buyer.
How would you craft a portfolio now, given that the market is back near record highs? What areas of the market are attractive to you right now?
Yeah, so what I would say about that is forgetting about what should be in the portfolio, people should always, regardless, be thinking global first. Like my comment earlier about GDP weighted global yield curve, you should always think global first, and then you come to the decision of where to be.
Even though global growth is slowing?
You should still think global first, and then you say where to be. And despite the slowing global growth, America's still doing just fine because of that currency carry. Money is flowing into America from that currency carry that I mentioned earlier. But at the same time, I think you want to be heavily weighted now to Western Europe, because sentiment about Western Europe is just dismal as dirt. And loan growth in Europe is continuing at a pretty good rate, and loan growth is an indicator of future business activity. And the fact is, quantity money growth in the Eurozone and Scandinavia is still doing nicely. The slower growth is reflected in current pricing. And I'm going to make a point I mentioned earlier of the gridlock feature. We have, and I've done some writing on this, we have a form of gridlock that's built into Europe right now that has never been seen before. And that form of gridlock will have a powerful force in stabilizing the moving obstacles in the Eurozone, but also Scandinavia, so that political risk aversion will fall. And we'll see that particularly with the Euro elections coming right at us in May. And that feature, with the debates later this month in the EU elections, and that feature will also be a positive for Europe. So my focuses would be America, Europe, a little bit China.
All right, so there you have it. Ken Fisher, cautious on some of these IPOs, but at the end he talked about the attractiveness of stocks in Western Europe, and I think that's not getting enough attention. We're all talking about how U.S. stocks are near record highs, but the traditional advice goes, you kind of want to look at areas of the market that have been beaten down, not ones that are flirting with record highs.
Right, absolutely.
Try to avoid home country bias.